Inflation hotter than expected in September. New data shows prices are up 8.2% from last year. That's down slightly from August, but it's still obviously very high. And now all eyes are on the Federal Reserve. What will they do? Maria Bartiromo, she joins us now. She's, of course, anchor of Sunday Morning Futures and Mornings with Maria on Fox. And it's so good to see you in person. And
great to see you.
You're our best guide as to what does this mean for people and what does it tell you about where we are and is there an end in sight?
Dana, Bill, it's great to see you. What this report is telling us this morning is that things have become harder and more expensive for American families. We have inflation up hotter than expected with a year-over-year move here of 8.2%. It was expected to be 8.1%. The core, which is stripping out food and energy, was also hotter than expected, up 6.6%. Here's what's going on. People's wages are declining because they are not making enough money to keep up with all of the price increases that we're seeing out there on things that we buy. So the overall consumer price index is up 8.2%. But when you look at components of that, it's up much more than that. For example, food overall up 0.8%, 0.7% on the food index. But when you look at specific items within food, they continue to be up in the double digits. I'm talking 17, 18, 30% on food items. I know I mentioned eggs a lot because last report, eggs were up 40% year over year. Eggs are up 30% year over year in this September number because the inflation is higher on the production level, and that is forcing owners of stores, groceries, to raise prices to pass it on to the consumer. So we can't keep up in terms of where this is going. Shelter, another major item. Rent, the price of housing up 0.7%. That's another issue. Shelter is 1/3 of the overall CPI.
Yeah, I saw a number. If you live in New York City and you make $70,000 a year, that $70,000 is now equivalent to 65 grand. So you've lost $5,000.
It's a good way to look at it.
Past year and a half.
Yeah,
right?
It's a good way to look at it because your wages are not growing enough to actually offset these major inflationary moves. And unfortunately, we continue to see more policy coming out into this economy that is stoking more inflation. The so-called tentative rail deal and a 24% raise that President Biden had a whole press conference about even before it was attempted really a deal. That's 24% increase for the unions. Other unions are going to go and threaten the picket lines if, in fact, they see that materialize. So more stimulus, student loan bailout, upwards of $1 trillion, depending on who you're talking to, 400 billion to $1 trillion, more stimulus. So you're not getting an acknowledgement from this administration of all of the spending causing inflation. Right now, the Fed is the only game in town. The Fed is the only one doing anything about tamping down inflation. Unfortunately, the Fed is now raising rates consistently, and that is also resulting in more expense for the consumer. The market now down 500 points at the open is expecting that we will get another 75 basis point hike for the next Federal Reserve meeting. That is on November 1st and 2nd. That's making borrowing expensive, higher in cost, on top of what we're expecting to be tax increases from this administration.
So the White House says the president has been consistent. Recession's possible. He does not think there will be a recession.
Well,
the other night he said it was a slight recession. We're going to talk to the White House next hour. I think the question is, what can you do?
Yeah. What can you do about it? And one solution would be to stop spending. But he's less than a month away from the midterm elections, and he's trying to buy votes, frankly. Yeah. So, look, let's be clear. 2 quarters of contraction is a recession. We are in a recession, but there are many people out there that are talking about a recession getting even deeper and worse. Jamie Dimon the other day, CEO of JP Morgan, said that we will be in a recession in 6 months and the stock market will sell off another 20%. Wow. Larry Summers the other day said that the World Bank and the IMF meetings, which are today and yesterday, that will be the last stop before the economic storm. So you've got a situation which, unfortunately, I think will take years to get us out of after this last year and a half.
Maria. Well, it's good to have your good to have your expertise and your information, even though it might not be what people want to hear. It's what they need to know.
Right.
Thanks for being here.
Thanks, Maria. A lot of people can't afford ears, as you know.
You're right.
Nice to see you.
You too.
I'm Steve Ducey.
I'm Brian Kilmeade.
And I'm Ainsley Earhart. And click here to subscribe to the Fox News YouTube page to catch our hottest interviews and most compelling analysis.